Today, we're going to look at what an IPO is and why a lot of startups want to do an IPO.
This is Raw Startup.
As the founder of Vivino, we've raised $57 million and raised a C round. I've done extensive research on how to do an IPO. Spoke to multiple bankers that love to take us through that process. Finally, I'll take a look at what it takes to go from startup all the way to an IPO. I'll also look at reasons why you may not want to do an IPO. Stay tuned for that. Okay, time for confession. I must admit, I have the same dream as a lot of founders. Imagine going to the New York Stock Exchange and ringing the opening bell for a company that you founded. I mean, that would be amazing. Vivino is a pretty big company now, so it could happen. Maybe I'll stand on stage one day and ring the bell. Something I have to talk about when we talk about IPO is that an IPO can be an exit. And I generally don't like talking about exits when we talk about building startups. Building startups is about building sustainable companies and enjoying that journey. Exits are less important. All that said, it's very important to know what an IPO is. Great, let's get started with a short description of what an IPO is. IPO stands for Initial Public Offering. It's the first time a stock is offered to the public. Before that, it's private, usually owned by a few people, founders, employees, and investors. A private company is usually owned by less than 100 people. Could be as low as 10 or even 5 people. But as soon as the company goes public, it is owned by thousands of people. It means anyone can buy stock in the company, and before the IPO, it's mostly professional investors that would invest. From the day of the IPO, everything you do is public. When you're a private company, you can keep revenue numbers and everything else to yourself. As soon as you IPO, you're a public company and everything you do must be public. The IPO is like a big movie premiere. The curtain opens for this company, and for the first time, the public can see this movie or this company. Okay, we got the basics done. Let's see why it makes sense to go for an IPO. First and foremost, it's to raise money. You now have access to the public markets and can raise money from anyone. This means you can raise staggering amounts of money, all the way up to hundreds of millions of dollars. Secondly, or maybe first priority for some people, is making the stock liquid. For the first time, there's now a real dollar value behind the stock. This can also mean a very big payday for some people, like founders, employees, and investors. I'd say that those two reasons are the most compelling reasons to do an IPO. On top of that, there are other bonuses, such as it giving quite a bit of credibility to be a listed company. In a second, we'll also look at why you don't want to do an IPO, so stay tuned for that. First, let's talk valuation. What's the company worth after it does an IPO? When a company is private, valuation is whatever founders and investors can agree on. When the company goes public, it has IPO'd, it's good old supply and demand. If there are more buyers than sellers, the price goes up. If there are more sellers than buyers, the price will go down. As soon as the company has IPO'd, the valuation is called the market capitalization, in short, market cap. Now, how does the pricing work once it's been IPO'd? And this might seem basic to some people, but I want to make sure everyone understands it because it's quite simple. Basically, they're buyers and sellers, and as soon as they agree on a price, a trade is made. The price of the stock is whatever the last trade was. Now take a look at this. On the left, we have buyers, demand. On the right, we have sellers, supply. As you can see, we have buyers that want to buy for $18. We also have sellers willing to sell for $18. Now we have a trade happen and the stock price is $18. Now take a look at what happens. We're running out of sellers that want to sell for $18. The next seller in line says $19 and there's no buyer at $19. Price stays at $18, but nobody's selling until a new buyer comes in at $19 and boom, we have a trade. But now the price is increased to $19. As you can imagine, if there are a lot of buyers and very few sellers, the price can increase rapidly. This is a real price because you can sell at that price. But always remember that this is like a democracy backed by money. What does that mean? Well, it means that this might not be the actual value of the company, but rather what people think it's worth. The total valuation of the company, the market cap, is basically the stock price multiplied by the number of stock outstanding. When a company has IPO'd and is traded on the stock exchange, you can always look up the market cap. Take a look at this, for example. This is Google, now called Alphabet. They have a market cap of around $750 billion. Not bad. So wrapping up valuation is basically market cap. As with most things in life, not everything is good with an IPO. Let's have a look at the downside of an IPO. Okay, let's look at the downsides. Here are the 3 primary downsides with doing an IPO. First, with listed companies, everything's in quarters. Every single quarter, they release financials and numbers to the public. That means that every single quarter, all these numbers are scrutinized. This also means that management feels pressure to deliver every single quarter. That can lead to short-term thinking. If you're building something that can take years and years to build, it can be rough to be a listed company because you have to deliver every single quarter. And if you don't, you might take a real bad hit on your stock. Second reason is oversight. As the public now invests in your company, there has to be some protection of the public. That protection means lots and lots of rules that the company has to comply with. It's also very expensive to comply with all these rules. You'll need lawyers, auditors, and other consultants. All in all, something that's very costly that private companies don't have to deal with. All that said, there are reasons why companies go for an IPO. For some companies, it makes a lot of sense. So let's see what it takes to get to an IPO. First and foremost, you have to build a great company with great people and great products. That's always a requirement for an IPO. On top of building a great company, I've boiled it down to 4 things you need to do an IPO. First and foremost, you'll need a certain size. A rule of thumb here would be a minimum of $100 million in revenue. It's not set in stone, but it's recommended. The second is growth. You need growth to do an IPO. The more growth, the better. I would say a minimum of 30% of annual growth over the past 2 years. Still, the more growth, the better. Then we have profit. Actually, profit is not a requirement. A path to profitability within a few years is a requirement. A lot of companies do an IPO because they're not profitable, but to raise money, fuel growth, and ultimately reach profitability. For instance, software support company Zendesk IPO'd in 2014 and were not profitable. They still aren't profitable. They've gone for growth instead, but have been immensely successful on the stock exchange, currently valued at almost $7 billion. The final one is predictability. The stock exchange likes predictability. As a private company, if you make 95% of your revenue, you're probably fine. But if you miss 5% of the stock exchange, your stock might just tank. Sure, you can innovate and launch new product, but you really want an existing portfolio of product that is a large part of your revenue and is very predictable. Preferably, there's also multiple products, so there isn't one single point of failure. Apart from being a fantastic and healthy company, these are the 4 biggest milestones that need to be reached to get to an IPO. There is an exception here. Around the world, there are these smaller markets that don't have these requirements. They're much easier to get an IPO on. Example is in London, there's AIM. In the Nordics, there's First North. So if you want to end up on the stage, ringing the bell, you know what it takes. Maybe I'll see you up there. If you want more videos to help you build a better startup, please subscribe to my channel for a lot more content like this. Thank you very much for watching.